Welcome everybody to Stock Thursdays. My name is Andy, Finance Guy. I am your host, and the main important event today that happened was the Nvidia post earnings report. This was an interesting one because Nvidia beat their earnings estimates. They beat their revenue estimate, beat their earning per share, and announced a $50 billion buyback program. Now, I don't know if you know how crazy a $50 billion buyback program is, but that's a very bullish sign for the stock market. However, the Nvidia stock still went down by 9% today. Now, you might be wondering, how is that possible, Andy? Why is it that a stock can beat their earnings, give good guidance, yet still go down by almost 10%, almost a correction? And it is because of expectations. An idea of what's going on with Nvidia and why it failed this post earning report, even though it had great earnings report, like it beat the earnings expectation, it's because of the beats are narrowing. So as you can see here in October 2023, it's an 18% beat, right? It's amazing on the EPS, on the revenue, it was by 12.47. That's amazing. And then the next quarter is still double digits, but it's still amazing. Like, wow. And then next quarter fell down below double digits, fell down to 9.8 for the EPS, and then for revenue is 6.04%. And then the most recent earnings goes all the way to 5.65%, and then revenue is beating by only 4.57%. Now, why is this a big deal? It's because Nvidia, you can see from this patterns that it's beating the margins slower and slower just by narrower margins. Now, this is a big deal because Nvidia is supposed to be the stock that beats everything. That beats out earnings by expectation. It's supposed to hit a home run every time. And just by the patterns that we have now from almost a year, that it's not able to do so. And as a result, the stock pulled back almost 9%. Like, think about it like this. I'll give you a good analogy is think about how LeBron, if he scores a triple double 30 pointers, nobody really bats an eye because that's LeBron. We expect championship from him. We expect 6 championships. However, if a rookie did a triple double 30 points, then they are amazing. They're going to be in the front page of ESPN. So the same thing with Nvidia. Unfortunately, they are treated like a LeBron, where we expect greatness from Nvidia. You can't just beat your earnings by 5.6%, which so many companies, if they beat it by 5.6%, oh my God, they would go ballistic. They would go crazy. But because it's Nvidia, unfortunately, 5.65 earning per share beating is not enough. We need more. We need double digits for it to go up. So as a result, you can see why it's a mixed bag, because the earning report is great. It's just that the alpha for Nvidia is no longer what it used to be. It is slowing down as a company. Now, you might be wondering, Andy, where do I go from there? Do I buy the stock? Do I hold the stock? Do I sell the stock? Well, I'm going to tell you 3 different types of investors that's in Nvidia right now. The very first investor is the Nvidia investor that believes that Nvidia is the next Apple, where Nvidia is going to keep on creating new chips every single year, just like Apple does, right? Apple creates new phones every year, and they're going to capture the market and build more expensive chips year over year. Well, this is an issue when it came to the Blackwell chips, because with the Blackwell chips, if there's a delay, we can't be having delays. Apple phones don't have a delay when their new phones come out. So that's why it's a big issue. But that's the first type of Nvidia investor. And if you are this type of investor, then it's a great time to invest in Nvidia because they're gonna keep on making new chips every year, and it just started. The demand for AI is there. The second type of Nvidia investor is the type of investor where they believe that Nvidia is gonna be like a gasoline stock like Chevron, ExxonMobil, Shell. These are the type of companies where there is no clear winner. They basically share the pie with everybody else. So, for example, AMD, SMCI, Broadcom, these companies are coming for Nvidia's lunch, and it's going to be an even market. There will be no clear winner. That's the second type of Nvidia investor. And the third type of Nvidia investor is the type of investor that believes that Nvidia is going to be the next Tesla, the next DocuSign, the next Zoom, where they believe that it's hot right now, However, when the hype dies, when the revenues start slowing down, like we saw in the previous graph, that they will be a forgotten stock. Because when was the last time you heard about Zoom? When was the last time you heard about DocuSign? These were companies that were so hot in 2020, 2021 that we barely hear about now. My personal thought process on Nvidia is a bit interesting because I am not an Nvidia shareholder. I don't have it in my portfolio, and I never even considered to get Nvidia until today. Today was the very first day that I actually considered buying Nvidia. Why? It's because the earning report is was very good actually. The fact that revenue is slowing down, sure, it'll bring the volatility down. However, the fact that it's able to grow its revenues was an amazing thing. The part that still worries me about Nvidia to this day is still the fact that it's still a cyclical stock. That during a recession, people tend to want to save their liquidity, their liquid cash, and they don't spend as much. And during those times, Nvidia can be hurt along with AMD and all the other chip stocks. But the part that I really like about Nvidia is that Nvidia at this current moment is the clear number one company in their industry. And if you remember other companies such as Uber in their industry, right? They take majority of the industry in their field. If you think about Netflix, how they dominated in their field. If you think about Apple in their field with phones, they take majority of the shares. And then now when it comes to Nvidia, I really like that it's the number one in their field and how they're able to capitalize as a number one player in their industry. My concern with Nvidia was always the competition side, not the demand side. With the demand side, I do think the demand is there. I believe with their partnership with Facebook, partnership with the other Max 7 stock, I believe it's there. The only issue is that there's always this worry that AMD, which is a very strong player in their field, can always come in and steal their lunch, just like Zoom did with Skype. One of the aspects I'm starting to really love about Nvidia stock is that it's starting to become more and more predictable and not as volatile. Because if analysts are able to accurately predict Nvidia earnings and how much they're going to beat, that means there's going to be less surprises in the stock, and less surprises mean less volatility. I never wanted to invest in a company like Nvidia where they went up 25% and went down 25% in the same single month, which it actually did in August. Another thing that Nvidia shareholders do need to account for is that September is known as one of the worst, actually the worst performing month in the stock market. So typically when people buy in September, do not be surprised that your stocks have gone down. It's almost the start of September, and as a result, market sentiment can be a little bit shaky. There can be a lot of volatility in the market. However, when there's high volatility, those are actually the times where investors can make huge gains. Interesting thing about Nvidia guidance that they did share was that on the next earning report, they are expected to beat earnings as well. But at this current moment in time, again, that's probably priced into the stock. At this moment in time, we just have so much high expectation of Nvidia, and that is the real problem here, you guys. It's not the fact that Nvidia is not performing well, it's performing great actually. Think of it just like that LeBron James analogy. Like LeBron James is putting double doubles, triple doubles. However, if he doesn't get that sixth championship, if he's not getting close to the title contention, and he's not nowhere, close to surprising us, to surprising the audience, right? Same with Nvidia. If Nvidia is nowhere near, double digit growth, just knocking it out, it's getting hard for them to surprise investors. Now, the difficulty is this is something that almost all companies have to go through, right? Chipotle at one point will have to go through this. Tesla at one point went through this. Zoom at one point went through this in 2020. I remember in 2020, we were talking about Zoom, DocuSign, like they were the next Nvidias, how their earnings was just crazy off the charts, how they're having crazy growth. And then unfortunately, the growth does stop. However, this is not for every company. We have companies like Google, companies like Amazon, companies like Microsoft who have just compounded their earnings time over time. So never forget those companies. However, those companies are in the minority. There are a lot of Zooms, a lot of DocuSigns out there, a lot of Teslas. So be careful out there, investors.